Hello guys, today I want us to learn financial accounting, the unit that is usually mostly in CPA, ETD, and also in some diploma courses. So we shall start from this beginning, and hopefully we'll continue making more and more videos of the same. So today, since it's a theory class, so that's why I'm seated here. There are no calculations, so we are just going to talk only. So starting with financial accounting, the definition, it's usually the process of identifying, classifying, measuring, and recording of financial information. So that whole process, it's what we referred to as financial accounting. So we're going to look at some of the users of financial accounting, some of the users of that financial information. One of them, the management of that company, will want to use that information so that they will help them in making proper planning for the future, for the next year, or for the even the current year that they are, and also to help them for proper decision making, to know the decisions that they are going to make based on the information that they have already collected. Then the other user of financial information, it's the employees. Employees employed in that company will want to know how the company is performing, so that they will know if their job is secure. Because if the company is going to fall, is going to liquidate anytime soon, they will know that their job is not secure. So they will, for their job stability, they want to know that if they will continue staying in that job for longer period, and also for the remuneration purposes, if their salaries will be paid or not. Because if the company is having a financial loss, obviously they will know that their salaries will not be paid. So that's the reason why the employees will need to know the financial information of that company. The other users of financial information are the customers of that company, so that they will able to know in case of any price changes. Because if the company is wanting to fall, they might want to increase the prices probably, and also to know if the company is going to fall at any time soon. So they will know, they will start seeking other alternative suppliers of the goods and services that company was offering. The fourth one are the lenders, who in this case they are the suppliers, the banks, and other people who lend money to the company. So they will also want to know the financial information of that company, so that they will able to know if that company is able to pay their debts once they fall due or not. The other one is the government for tax purposes, obviously. That's why they will want to know if the company is performing well, to know the amount of tax that is going to be paid. And also the investors, people who invest their money in that company, both the potential and the current investors. Potential investors are those people who are the prospective investors, people who want to invest their money in future in that company. So they want to know how the company is performing, to know if their money will be secure or will get profit in that company once they invest or not. Then, and the last one, the other user are the students. Students, of course, you'll want to know the financial information of some companies for educational purposes. For example, in helping you to calculate the ratio analysis and other information, even for the researchers also, to be able to compare, to make comparisons between different companies. So in accounting, you usually find that person, mostly they are the accountants, the financial accountant. They usually have a lot of things to do. The process usually starts from once they receive those documents, they will have to capture them. That's the first step. So if you are asked about the accounting equation of a company, so you are going to start with capturing the source documents. The source documents are like the receipts. Once something has been bought from that company, or something has been paid, the accountant is going to be given that receipt. So the receipt is a source document. The check, the one that has been used to go and bank the money in the company, so that's also a source document. The invoices and credit notes, debit notes, all those are source documents. So first of all, they are going to receive all those source documents, they capture them, then now they enter them into books of original entry. That's the second step, entering transactions in the books of original entry. The books of original, for example, if they are the sales, they are going to put them in their sales journal. If they are the purchases, all the purchases that have been bought, they put them in their purchases journal. If there are goods that have been bought, then they have been returned for one reason or the other, they are going to put them in the return either inwards or outwards journal. All of them, they are going to be classified each according to their different categories. If the money from the banks, the checks, they are also going to be put into a journal also. And also there is also the petty cash book that usually records these small amounts of money that the company usually spend. So also in accounting, we are going to look at so after the books of original entry, they now post them into what we call the ledgers. We post each now, if they are sale from the sales journal, now you record them in the sales ledger. Then now from there you extract a trial balance. We will see all of them, how it usually comes about. Then adjustment of entries. Then finally preparation of financial statements. The financial statements in this case are usually the cash flow, the balance sheet, the one that is usually also called the statement of financial position. Then there is also the statement of comprehensive income, which is commonly known as the income statement. We shall see how to prepare all of them by the time we come to the close of this this unit. Yeah. So another thing we are going to look at today, it's identifying what are the assets, the liabilities, and capital. Those are the key points once you hear the word financial accounting. So for the assets, these are the items of value in an organization, and they are usually classified into two. There is the fixed assets and the current assets. For the fixed assets, these are assets that usually stay in the company for more than 1 year, for a period of more than 1 year. For the current assets, they usually stay in a company for a period of less than 1 year. Examples of fixed assets are usually the plant and machineries, the motor vehicle, the land, equipment, all those things, the items of value in a company that will stay in that company for a period of more than 1 year. Then the current assets, these are things like cash, cash at bank also, the debtors, there is the stock, which is also known as the inventory, and we shall continue seeing more and more current assets. Then the other term, there are the liabilities. Liabilities, these are the obligations of the company. Ama zile mandeni zenye company na owe to other people. Those are the liabilities. Like it's a negative to a company. Yeah? For the assets, it's a positive to a company. But for the liabilities, they are going to reduce the amount of money that the company has. Examples of liabilities are like the creditors of that company, bank loan, bank overdraft. All those are the examples of liabilities. Then capital, it's the amount that the company, the owner of that company has invested in that company. So from there, that's when we develop something known as the accounting equation, which is usually from the word, the accounting equation. It's usually assets is equals to capital plus liabilities. Assets is equals to capital plus liabilities. This means that for all the items of value that that company owns, they either got those assets, those items of value, from the amount that they owe, which is the capital, or they borrowed the money from other people, which are the liabilities. So that's where the accounting equation usually comes in. So it's assets is equals to capital plus liabilities. So I think for today we will stop there. Then in the next lesson we shall start computing and start seeing how we can put that, all that we have said, into a mathematical way, and also we can be able to start calculating from the source documents. We see how it's prepared. We go to the journals, how they are prepared. We go to the ledgers, the trial balance, and also finally the financial statements that are usually audited at the end of the year, and that are usually sent to the users that you have said, so for them to use them for their own purposes. And the users, some of the users that you have said the managers, the employees, the customers, the students, the government, and lenders, and also investors. All those are the users of that financial information. I hope this lesson was helpful in one way or another. See you in the next lesson. Bye bye.